So we have a new administration at the helm here in the U.S. Just over the weekend, you have this quote-unquote comprehensive strategic partnership that was signed between China and Iran. Iran's going to be supplying more oil to China. You can't talk about the crude market and not talk about geopolitics. Are things shifting on the world stage, and what does that mean for exports, say, of U.S. products and U.S. crude?
I think one of the key reasons, going back to this whole idea of resiliency in supply chains, is the escalating trade war between U.S. and China. Call it a Cold War or whatever you want to call it. But what this is going to introduce is the need for self-reliance. And so when we talk about this resiliency in supply chains, it's building strategic reserves, which China already has, whether if it's strategic reserves of grains, copper, oil, because think about U.S. is a large exporter of both grains as well as oil. So that's one of the key responses. But even in the U.S. alone, you have Made in America, focused on creating independent supply chains in the United States. So I think this is going to be a feature of the market going forward. It's going to create more lengthy supply chains, create more demand for commodities. And I like to emphasize, when did the Americans and Europeans build all of their strategic reserves? In the 1970s in the Cold War with the Soviets at the time. So I think we're going back to a period very similar to that in which you have a lot of these inefficiencies introduced into the system.
Jeff, just wanted to finish quickly on gold. I know you guys have a $2,000 price target, so some upside from where we are now. But a more broad long-term question, do you think gold will continue over the next decade to be one of, if not the primary hedge against risk and protection against monetary debasement, or is its role in that sense kind of a thing of the past now?
No, I think can Bitcoin and gold coexist? Absolutely. And they're actually, now we're watching the trading patterns of Bitcoin. It's acting very differently than gold. Gold is your traditional defensive asset. Bitcoin is acting more like a risk-on inflation-type hedge, more tied to what's going on in the economic cycle. So they may be defensive assets, but they're trading very differently, which means there's room for both to coexist. Now, in terms of thinking about you put that pool together of defensive assets, we've got roughly about 2.5 trillion in gold, 2 trillion in Bitcoin and digital currencies. That's roughly $4.5 trillion. If you go back to the maximum amount of defensive assets as a share of AUM, total AUM, it was in 1979, 1980. In today's dollars, that'd be about 5 trillion. So if we look at the digital currencies and gold, you lump them all together, about 4.5. Max historically is 5. So we got to ask as a group a whole, are we going to take this higher? Is this situation more serious than 1979, 1980? That's a question we'll have to answer.
Shepard Smith here. Thanks for watching CNBC on YouTube.